Hey everyone, welcome back to Corporate Decoder. Today, KARMAN Holdings Inc. just filed a current report on Form 8K about a significant stock offering, and I am seeing one major factor that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing reveals a large secondary stock offering that has already happened, and it gives us a glimpse into how much stock is being sold and at what price. So what is going on here? Well, KARMAN Holdings Incorporated announced on May 28, 2026 that they entered into an underwriting agreement. Think of this as a deal with investment banks to sell a bunch of the company's stock to the public. The company KARMAN Holdings Incorporated is incorporated in Delaware and has a commission file number of 01-42520. Its principal executive offices are located at 5351 Argosy Avenue, NU, Huntington Beach, California, and their phone number is 714-898-9951. The company's common stock is traded on the New York Stock Exchange under the symbol KRM. KARMAN Holdings Incorporated is identifying itself as an emerging growth company. This means they have certain flexibilities in reporting requirements, especially regarding new accounting standards. This is where the main action is. The company, through its selling stockholders, agreed to sell 14 million shares of its common stock at an offering price of $61. Per S-Hair, this is a secondary offering, meaning existing shareholders are selling their stock, not the company issuing new shares directly for its own capital. This means the underwriters Citigroup Global Markets Inc. and Evercore Group LLC had the ability to buy even more shares if they thought demand was high enough. Typically, this option is exercised if the stock performs well after the initial offering. The offering itself closed on the 1st of June 2026. This is a critical part. It's a lockup period for 90 days starting from May 28, 2026. The company itself promised not to sell any more of its stock. This helps prevent a flood of new shares hitting the market, which could drive the stock price down. It signals that the current sellers and the company want to support the stock price after this large sale. This is standard legal stuff. They are making sure everyone is on the same page and that the underwriters are protected against certain risks, especially those related to not telling the truth about the company or the stock, which is a big deal under securities laws. Beyond the offering agreement itself, the company also provided an operational data update on May 28, 2026. This is important because it gives investors a snapshot of how the company is doing financially or operationally around the time of the offering. They also put out a press release on launch day. This is typically upbeat, announcing the deal and highlighting positive aspects of the company. Then on the same day, they announced the exact price the stock would be sold at. The offering price was set at $61 per S-Hair. Considering the current price is around $51.84, this offering was priced significantly higher than the current market value. This usually means the selling shareholders and underwriters believed the stock was worth more, or they were confident in demand. For context, KARMAN Holdings Incorporated has a market cap of $7.2 billion and trades at a price-to-earnings ratio of 236.5, indicating high investor expectations. There was also a corrected press release issued the next day about the operational data. This can sometimes happen if there was a minor error or if they wanted to provide slightly updated information. This section just lists all the documents that are part of this filing. It is like the appendix to the report. This is the actual contract for the stock sale. It details all the terms and conditions between the company, the sellers, and the investment banks. This is usually a legal opinion from the company's lawyers confirming that the stock being sold is valid and that the company is in good standing. This is the actual operational data update that was filed. It would contain the specific numbers and information about the company's performance that they shared. This is the press release announcing the launch of the offering. And this is the press release confirming the pricing of the offering. This is the corrected press release about the operational data update. Finally, at the end, we see the signature from Mike Willis, who is the Chief Financial Officer of KARMAN Holdings Incorporated. This signs off on the report confirming its accuracy under his authority. The date of this signature is the 1st of June 2026. Which aligns with the closing date of the offering mentioned in the report. Looking at the bigger picture here, KARMAN Holdings Incorporated, which is in the industrial sector, specifically aerospace and defense, is conducting a large secondary offering. This means existing shareholders are cashing out some of their investment. With a market cap of $7.2 billion and a P/E ratio of 236.5, the stock is valued very richly, suggesting high growth expectations. The fact that they priced the offering at $61 when the current price is lower might indicate confidence from the underwriters and selling shareholders about the company's future prospects or a move to solidify a higher valuation floor. The 90-day lockup period for the company is a positive sign. as it shows a commitment to not dilute the market further in the immediate aftermath, which is crucial for stabilizing the stock price after such a large sale. The operational data update, if it was positive, would further support this, given that Piper Sandler recently upgraded the stock on munitions demand. And other analysts see KARMAN Holdings Incorporated as well, positioned in defense. This offering might be more about capital mobility for large shareholders than a reflection of short-term trouble for the business itself. The risk I am watching is whether the company can continue to meet the high growth expectations implied by its valuation, especially with such a significant amount of stock being sold by insiders. My biggest concern is that a large portion of current holders are taking substantial profits, which could weigh on future price appreciation unless new catalysts emerge. What I am actually looking for is whether the operational data released aligns with this optimistic outlook and supports the $61 offering price in the long run. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.